So speaking of capital raising, we've got Metcash this week, $375 million fresh capital. They've got a bunch of things they want to do with the money. They at the same time announced a 63% fall in profit. I did an interview with Andrew Reitzer just after the profits were announced. Well, Andrew, the Metcash story seems to be pretty simple. You can't grow in groceries for a number of reasons, so you have to look for growth elsewhere, and you're re-engineering the business and raising money to buy growth. Is that correct?
Alan, not 100% correct. I mean, I think our grocery business is doing exceptionally well. If you go back, 6 or 7 years ago, our market share was 11%. At the moment, it's 19.5%, and then obviously the Franklin's deal will take us to over 20% nationally. This year, we opened 58 new IGA stores, and then we've obviously got the 80 or 90 Franklin stores coming across. So I think it's going well. It's a tough market. There's a lot of deflation in the market. There's sort of a marketing war between the two big gorillas. But we're holding on to what we've got, and I think that's okay. That's not really the reason, for going to look for growth anywhere else. I think the reason for that is that we have a very, very good business model. And our business model is a big wholesaler doing brilliant supply chain stuff, doing merchandise marketing and branding on behalf of a network of franchise independent retailers. We're the champion of the independent retailers, and all that's happened is in Mitre 10 and in Autobahn, we've been presented with the opportunity to be the champion of another category of independent retailers.
But it's not just the price war between Woolies and Coles. I mean, obviously that's significant, but also Aldi is really moving and growing fast and driving prices down.
What's driving prices down is really the strong Australian dollar, making imported products and many, many commodities that manufacturers buy cheaper. So that's what's driving prices down. So you've got these massive promotions. In fact, if you look at what's happening in the market over the last 2 to 3 years, organizations and even within our sales and the sales of my competitors of house brands aren't doing that well. Because what's happened is the gap between the brands that Aussies love and house brands has narrowed. So before, when the gap used to be very big, certain people would say, okay, so I'll buy the house brand. But the gap's narrowed now, so they say, well, then I'd rather buy the brand that I love.
Now, you're moving into car parts with the acquisition of ABG, but you're raising $90 million in this equity raising for other acquisitions. What sort of things do you have in mind?
I think what the board felt is that if you're going to go to the market, you only get one shot at it. And what's currently in front of the board was a proposal from management to please buy the other 49.9% of Mitre 10. That's a brilliant business. We've done exceptionally well with it. We've presented with an opportunity to go into automotive brands, which is Autobahn and AutoPro. We think we can really do well, lots of synergies with the group. We're buying a new technology for our warehouses. And there are 3 or 4 other acquisitions, bolt-on acquisitions, which we have approval for and which we're very, very well advanced in terms of the negotiations, but they're not complete. So if it's not complete, I can't specify them to the market and our shareholders, but if you add them all up, they come to $90 million. But what they are, they're Australian opportunities in wholesale that bolt onto the other 3 businesses. So they're opportunities in food, opportunities in liquor, and opportunities in Mitre 10. And they're just more of the same.
Thanks very much, Andrew Reitzer.
Thank you very much, Alan.